Hi, everybody. I need a few minutes. I gotta get a bottle ready for the kids, but since this is time sensitive and I'm right on the cusp of this reversal, I'm gonna explain everything. I'll be right back, but I just want you guys to know right now that I closed my shorts. I switched long. I had a couple different shorts with the leverage pairing and a regular short on a couple different things. I closed all the shorts, went long. I sold some of my long-term BTC. I bought that back at about 2.5% lower than I sold it, so I made a quick 2.5% and now flipped right back. What else? Okay, that's it. That's the important stuff. I'm gonna get the bottles ready for the kid, but I am back long. I am in now. So when you see this pump right now, I'm catching all this good stuff, and I will fill you guys in a couple minutes. Okay, I'm back. Make sure we got everybody in here. I'm assuming you guys can hear me. I'm just gonna go ahead as if you can. Somebody in the group, you can just tell me in our premium chat if just confirm that you can hear me, just so I know. You didn't hear me, but at the beginning when I first started the live, I explained some stuff. So that's why, and then I muted it again while I got a bottle for the kids. All right, so let me explain what's going on. People who aren't in the premium group might not know what's going on as far as what I'm referring to specifically, which is fine. But I just invited everybody. I figured I may as well just give you guys a quick update because I'm tight on time and I can't make a bunch of pretty charts that have text that explain everything. But I wanted to quickly explain what I'm doing and what my plan is. So let's jump in. So now here is last night. That was my entry last night on Bitcoin. And then I sold this morning. As soon as I woke up, I dumped and took, I don't even know what, 9% profit. I have to go back and check, but it was nice. This was the one from the night before. So both these entries were incredible. This case, I sold and got out and bought back in after another correction, except this correction was extraordinarily bullish. It was a very minor sideways correction. When you get a sideways correction like that, we talked about this in the stream last night and in prior streams, but it's extraordinarily bullish when you get everything is saying that you have to correct pretty hard, but you don't correct that much. Obviously, that's really bullish. You have a lot of sell pressure pushing the price down, but there's so much buy pressure pushing it back up that it essentially rejects all those sells that would normally bring the price down, and you end up going up. So those were some great trades. Now, we had this correction here finally, and then I realized it looked, just looking at it roughly, I was like, you know what? That's subwave. It's pretty damn close. That might actually be a solid wave 3 at 1618, which puts us in wave 4 now. Now, I didn't have this count at that point, but it turns out that actually looks pretty damn good. So I ended up quickly checking, and sure enough, this wave 3 right here is a perfect 1618 extension. So that is an ideal, perfect target for what I would expect at a wave 1. At a wave 3, and then that would be wave 4, right? So this is perfect. That was just another subwave count we were playing around with. So this would be a 1618 extension, right? You have wave 1, and this is exactly a 1618 extension of wave 1. This is a perfect subwave count, the sub count, right, for a wave 3. So then I realized that actually would be a perfect scenario for that to be a completed third wave, and now we're in wave 4. So the question is, what happens with wave 4? So once we started coming down here the second time, I sold some Bitcoin. I opened up a couple different shorts on VET and EOS, as well as BTC, and then I even did a little trade on ETH Bear, and I made 9% on ETH Bear. I made 2.5% increase on my Bitcoin by selling high on my long-term position. I sold half of it up high, bought back just now low. So I made 2.5% more Bitcoin that way. And I had multiple strategies. Guys in the group know what I'm talking about here, where I used all three of my simultaneous strategies, my different strategy groups, and using those groups, I was able to make money in my short-term cash account. I was able to make money on my trading account and make money on my investment account. So this was a really great short-term move. Now, I was actually thinking we were going to correct further, and then I noticed after I picked up the fact that this was a perfect 1618 extension that it's a perfect count. So this is obviously a wave 4. So then I realized right now we actually are in a perfect position to make a long trade, but have some backup here. So the way this would work out, I wish we came down a little bit lower, but I did a fib retracement. So from right here. So based on this fib retracement, this would be for wave 3. We are now at the 382. So this is a perfect retrace. Let me get rid of this old trade so it doesn't keep popping up. Actually, you know what? Let me do it this way, because I like to keep it on there for reference later on. So this is an exact 382 retrace right here. So we maxed out almost exactly to the 1618 extension at 68.17, came back down to the 382, almost to the dollar. I mean, that was really, really close. And now we're bouncing slightly, and right here you'll notice that actually is an ABC, so we have a nice pretty zigzag. So far everything is perfectly textbook. It couldn't be more perfect. 1618 wave 3 extension, 382 retrace for wave 4. Everything about this is perfect. So then you have to ask the question, are we going to bounce here at the 382 or keep going down further to our next main support zone? So we're pretty close to the Ichima dynamics, where we have the 222 and the 55 EMA here, the 99 a bit further. If we did push down and wick down a little further, maybe to the 0.5, that would be a great scenario. But I don't think that's necessarily going to happen, and here's the reason why. Normally, I would expect to retrace to the 0.5 or the 618 maybe on a wave 4 like this after such an aggressive push up. But since we maintained such bullish action last night with this sideways correction and pushed up again into that final subwave, since we were so bullish in that particular instance, that leads me to believe that we can maintain that bullish momentum and not get such a deep correction here. So normally we would get a 0.5, the 50% fib retracement, but since we're so bullish, it's not unrealistic to get a lighter correction that's not so extreme, because you have so much buy pressure pushing the price up, eating up all the sells, so you're not going to get as big of a dump as you normally would get. Now, as an aside, from a longer term perspective, separate from this count, I'm talking about short term stuff here. Longer term stuff, and Chart Vampire broke this down, a scenario where we go back down to 3 and change. His long-term work is like nothing I've ever seen. He really is incredible. He's just as good at that stuff as I am with short-term stuff, if not better. He's a master at the long-term stuff. So I have to take his analyses very, very seriously. So I do still believe that it's very, very possible that we get that bigger drop back into the 3K range. Except now, given how bullish we've been and how much momentum we've been picking up, given how quickly and how aggressively we decoupled from the stock market and resumed our actions separate from what's happening with traditional assets such as equities and commodities, given all of that, I think there's only about a 30% chance that we get that bigger drop. But I'm working on the short term here, and I don't really care about the longer term stuff, because with all of my short term trades, I employ very strict risk management. I have a stop loss on every trade. If we do end up coming all the way back down to 3K, that would be great news for me, because I'll get stopped out. I'll have all those profits from where we are now. And then because of my past strategy, I will end up making a lot of Bitcoin. So if I get liquidated and all my trades stop out, I end up getting out of the market while the price is at 61.60, and I can buy back in when the price is at 3,500 or something like that. I essentially just doubled my Bitcoin, right? If I sold and I take $10,000 out of the market and the price goes down 50%, with that $10,000, I can now buy twice the Bitcoin. So if I had 1 Bitcoin now and the price goes down 50%, I can then buy 2 full Bitcoin with the same money that I took out of the market from selling at the higher price. And that's the beauty of my past strategy. It allows you to get all the benefits of short selling without actually margin trading. So that said, this is short-term stuff I'm working on right now, but the reason this is such a beautiful opportunity and why I immediately switched along on all of my strategies at the same time, I had long-term, short-term, cash account, investment account, everything I had shorting for the last hour, and I made good money doing it, but I was planning on holding longer until I noticed this short-term wave count, and then I was like, shit, I have to switch back long. And this is why, again. So since we're sitting on a great support with the 382, it was also a really good horizontal support last night with all this sideways action. Now we're in a position where I can enter and place my stop loss below that support structure, because if this support structure fails, we're almost certainly going to the 50% fib retracement, or maybe to the 618. The 618 would be an ideal target, not only because it's a larger correction, it allows us to fully reset before we push up, but we also have the Ichima dynamic supports there with the 99 EMA in the top of the cloud. That would be a perfect scenario to correct all the way down. Then we can really push up into that next wave. So by entering right here, I could place my stop loss just below. I'll show you right here. So it's a little late now because I already got in, so I'm just going to set this just to illustrate it with my stop loss lower, closer to where my actual stop loss is, which is down below that next support. Let me show you. So by having 3.5% is actually a pretty deep stop loss for me, but it's okay. Sometimes I have to take additional risk, and that's the beauty. Since I was able to make good money on this short-term rejection, we got rejected right at resistance, so it ended up being a perfect opportunity to short. I wish I got in at the beginning, but whatever. Since I got in and made some money on that, I now have that profit to sort of play around with here. So I'm able to take slightly more risk than I normally would. In reality, since I got in a bit lower, my stop loss is closer to 3.4%, but right here with this example at 3.5, that's still pretty good. All right. Let me see. Okay, so by entering here, my stop loss goes below the 382, and I actually have the 55 EMA and the 222 EMA. Jen, can you get Layla? The 222 EMA, twins, bro. The 222 EMA and the 55 EMA are climbing right here. So those are there for possible support from the dynamic, Ichima dynamic supports, and the 382 is right here. If you wanted to play this a little bit safer and not take on as much risk, if you didn't just make profit, for instance, and you wanted to make sure that you're not risking any of your capital here, you could enter right there and place your stop loss just below the 382, maybe just below that this green candle. Because if we are going to bounce here, most likely we're going to push up from here and not come back down further again. So that could be a good opportunity to maybe get in with only 1 to 2% risk at the most, with your stop loss relatively tight to your entry. Since I can afford a little bit more flexibility on the risk side, I decided to place it a little lower, so I have the Ichima dynamic supports with the EMAs coming up to protect my SL. So with all that, this is the plan. I'm in now, and if we do resume up now into this wave 5, this could potentially be a 15% move on Bitcoin if we're able to break through the main resistance just below 6,900. So that's option A. Option B would be if we do fail and we do correct further. So if we do come back down and correct even further, I'm still going to be getting back in. I'm just going to wait for a lower entry. And the beauty of this setup is we know exactly what those potential targets are going to be. Look how well we got support from the 236 before the short-term bounce, and then we eventually came back down and found support at the 382. The next stop's going to be the 50% fib retrace, and I may even wait to get to the 618. So if this support here fails, my backup plan is just to get in lower when we get to the next support. So I have two opportunities to get this right. If I'm right this time, I'm going to make a boatload of money calling this bounce and getting in nice and early and going long. If I am wrong, because of the way I use my risk management tools and the way I set my stop losses and manage my risk to within my risk tolerance, I'm able to have a backup plan, which is if this does fail, chances are I'll be right on the next entry because the next entry is also going to bounce off of a support. So that's my plan. I wanted to let you guys know right away because it's very time sensitive. This can break out big right now, and if it does fail, you kind of need to be aware because I want you guys to keep an eye on this and watch for it finding support at those next supports. The key support is going to be the 50% fib retrace, even though it is a potential support to get a bounce. I don't think it's the most likely. I don't think there's enough confluence there. I think what's much more likely is either we keep moving sideways or slightly bullish here, and then the 222 and the 55 end up catching up to the 382. Then we have a major super strong support zone right here, and we push up from here without ever coming lower. On the short term, at least. We can come lower long term, right? We could still get a big dump. Like I said, there's a 30% chance that happens. So that would be the short term scenario where we don't come down. And if we do come down again, I would be targeting the 618 retracement right here at around 57.20. So my next target would be 57.20, maybe right off the top of the cloud, could be a perfect spot to bounce. So we might end up pushing down here if we get a failure, and then I can enter right around 65.20, roughly. And now if we go straight south of there and we don't bounce, well then I'm probably going to expect that we're getting that big dump after all. So I'm not going to want to enter. I'm only going to enter if we get strong support and see a bounce like we just saw now. The other thing about my risk management strategy and why I'm able to make trades like this without worrying about how it's going to play out, since I not only have a backup plan down here, but right here, the way that I got in, all I really need to do is bounce up to the 236. If we can bounce up to that 236 at 64.50, I'm going to move my stop loss either up to my entry, and if my stop loss is moved all the way to my entry, it becomes 100% risk-free. I'm going to be in a totally risk-free trade if that's how it happens. But if we push up to the 236, instead of doing that, I may want to give myself a little bit of flexibility in case it comes back down to retest my entry. So instead of moving it up to my entry, I'd move it up to just below the 382 right there. So I'm still risking 1.25%, but I'm not risking 3 or 3.4%, obviously. So if I can't get to risk-free status, I would at least like to get from medium risk status to low risk status. The other thing to look at, based on my Stoke model, it comes and goes based on how the market's been. When the market's especially volatile, it can work very well. But when you get to the point where you have panic selling and the TA sort of goes out the window because there's just so much aggressive selling that no TA model can anticipate it fast enough, in those circumstances, the oscillators don't apply as much. But so far, recently, since things have calmed down and settled, my oscillator strategies have worked very well. We've seen bearish divergence and bullish divergence come into play with RSI. We've seen the Stoke model work a lot, where we bottom out on the Stoke before a push up right here, bottomed out and reversed. That indicates a shift in momentum, and then we had a big push up. We maxed out on the Stoke right here, right at the top, and then we had a big push down. So we're already down and pretty much reset to the point of almost being oversold. So at this point, this is an ideal spot to see that reversal in momentum, get the push up, you get the crossover, the stochastic crossover, and then we start pushing up again. And once that happens, sometimes we go and push up and come right back down, like on the left side of the screen here. But more often than not, you do get a full sine curve. You get that full cycle. So if we get a full crossover right here and we push up to the 236, I'm going to have extraordinarily high confidence that we're going to continue pushing up, most likely all the way to complete the wave 5 to about a 15% run. And again, that assumes we break through 6,900, which is a major resistance from before. If you go back, you'll see that was a key resistance on the way down, or a key support and then resistance on the way down. Oh, you can't see it on that because there's that candle's not broken up. You have to look at like the lower time frames to really see it. Nope, you can't really even see where the candle breaks up unless you look at the 15-minute. Man, that dump really screwed everything up. Even going back, I'm trying to find areas where there was support on the way down. You have to look at friggin' 5-minute candles for it to make sense. But if you go all the way back, you can see, in this case, I have to use the daily. This might work on the 4-hour. Let me see. There we go. So we can do it this way, and you could still see from at the end of the year, this was that main resistance, right? So this whole region right here is super, super strong resistance. The main bottom is going to be, well, you can't see it because I hit everything, but it's going to be from 7K, really not all the way to 6,500. I would consider that two supports. So there's a support at 7K and a support at 6,500. 6,550, but there's actually a bit of a range. So the 7K really goes all the way down to where this wick came, which is also where you have the support right here. Let me blow it up so you can see it better. The bottom is a straight up support. Down here, you have right here, which is 68.77, and you can see this wick down here. You can see all these candles getting insane levels of support right there, and you can see the breakup of these candles all right here at that exact same level. So you're starting at about, what was it? You're starting at about 68.50 and going all the way up to 7K. So you have about a $200, $150, $200 support range there. And that's kind of what we're up against. So unless we were to push up above that 7K target, we're not going to be able to push all the way to close out that wave 5. But I think we can. We got rejected this time. The other way we could see it play out is we could get rejected in the short term and then push up again. So what you might see, another way these things sort of play out is, even though you're seeing that wave 5 here, you could get a quick push up and then get a rejection before another push up. You could also end up getting a deeper correction. It depends how that plays out, but hopefully we could push all the way through 7K and then we can get all the way to close out. Now, once that happens, that might be the right time to get that deeper correction. So that's something to keep an eye on too. If we maintain this support here and we're able to push up through the 236, through that prior resistance at 69,700, and we can get all the way up to that final wave 5 target around 7,200. If that can happen, that might be the point where we do finally get that big drop that we've all been speculating is probably still going to come. The one thing I wanted to quickly check, because I don't think that wave 5 isn't perfect. I want to make sure that I have a good one-to-one extension, because we're most likely going to see a one-to-one there. So we can push up. Oh, wow, I had that perfect just from doing it with the naked eye. I always say when I'm doing like the educational, the Flux University streams, and we're talking about Fibonacci, I always tell the guys, like, after you do this enough and you spend enough time on enough charts, you just sort of see it. You don't even really need to look at the Fib extension tool, because look, I just drew this with the naked eye, and that wave 5 was pretty much exactly where the one-to-one extension falls at 72.40. So yeah, that all fits. This works very well. I think this is a good strategy. I'm able to get in long here, and I have a backup plan if I am wrong and it fails. I know exactly what I'm going to do. I'm going to wait until I find that support at these lower support levels, and then I'm going to get in. And then my confidence on that second entry is going to be extraordinarily high. If I'm wrong on that time and I fail both times, then I'm going to expect a much deeper correction. So that'll be good for everybody because we'll be able to buy in much lower. That's why it's important you have a stop loss and you don't hold on to coins as they're collapsing, because once they keep dropping down, you need to dump at some point, then you could buy in cheaper. That's the beauty of my past strategy, where you liquidate your own assets, take all of your capital out, and that capital can buy twice as much of whatever it is you were holding after it drops down 50%. So that's something to consider as well. All right, I think that brings everybody up to speed. Does anybody have any questions? I haven't looked at the chat at all during this stream, so I don't know if anybody's been asking questions here. Oh yeah, there's like only 2 comments in the chat anyway. My Stoke model works on all time frames. It works. Most of my trading is done on the hourly because I'm a day trader who dabbles in more swing trading. Sometimes I'll hold trades for more extended periods, but primarily I'm a day trader. When I am scalping, I'll drop down to a 15-minute chart, but primarily I pretty much live in the hourly. That's where my Ichima model performs the best. The Stoke works everywhere, but primarily I use it on the hourly, the 4-hour, and the 15-minute. Those are the 3 key TFs that I focus on. Position sizes vary. If I'm dealing with majors, I put large sums. And if I'm dealing with low caps, those smaller caps, a lot of the time I will only put in a couple grand or something, because the order books can't handle my orders. And then as long as there's more liquidity and more volume and they can handle my orders, I can put more capital into them. But typically my trades on the majors are going to include most of my trading capital. Like I went all in with all of my trading capital into Bitcoin the other night, which was a 6-figure investment. So I'll do that on the majors, but obviously I would never do that with small caps. How do I tie in Ichimoku with other indicators? Well, you can watch the video on my YouTube channel about my Ichima model and how I use the cloud and the 3 EMAs together as dynamic supports. You can check out that video and that'll explain a lot of that. Flipper doesn't use stop losses. Yeah, he's what he says, but everybody needs to use stop losses. I think he's insane. If he wants to take on the risk, if he can afford the risk, that's for him. But that's the thing. We all have a different risk profile. My risk tolerance is going to be radically different than your risk tolerance, right? So if I can afford, because I made a lot of money this morning, I might be able to afford to take a trade that has a relatively high risk associated with it, while you might not be able to take that trade because you can't afford that risk because you didn't make money in the morning like I did. So everybody's very much different, and it's important that you trade according to your risk profile and nobody else's. So if me or if Satoshi Flipper or any of these guys who preach about, well, he doesn't, so he says he doesn't use stop losses, but he says everybody else probably should. All the other traders on Twitter who talk about stop losses, if they do or don't use them, that's based on their risk profile. So I say everybody should use them because you really can't go wrong using a stop loss. But you can go very wrong by not using a stop loss. That can utterly destroy you. You can get completely wrecked on a single trade by not having a stop loss. How do I determine RR? Well, it depends. I don't aim for a specific RR, but if I have a rough target and I know what my RR is, that's great. Then it'll help me determine whether or not it's worth getting into the trade. But the beauty of how I trade is I'm so good at spotting these bigger breakouts that the RR is always going to be attractive. I'm never getting into a trade with a 1 or 2 RR. It's always going to be several multiples beyond that, 3, 4, 5, maybe up to 10, because I'm looking for larger breakouts, just like I did on Bitcoin, right? I showed you my last 2 entries. These were both very large entries on Bitcoin where I got in. Go back. Oh, I minimized it. Here we go. So this was my entry last night. I got in with the group live on the live stream last night right here, before this big push up, right? So we got a full 12% that time. And this time I got in and it went up at the most 23%, but I think I only took 20% profit because I bought it when it came back down. So I was able to get in and had these big breakouts. That's why my RR is so high. Like in this case, my RR ended up being 14, right? And now on the second one, last night, my RR was 10. So I get into these really high RR trades because I'm really good at spotting these big breakouts. And that's mostly partially because of my Ichima model, but also my ability to identify reversals, especially trend reversals related to momentum. Because if you can spot that momentum shift using Stoke and RSI, then you can get in right as we're starting to pick up, which could turn into a major run. It doesn't always, but you're getting in at the bottom of that momentum shift. And that change in momentum is usually the primary marker before a bigger breakout move. So by doing that, coupled with the fact that I'm really good at managing my risk with tight stop losses, since my Ichima model is such a great support model, I can buy in based on that, set my stop loss only. In this case, my stop loss was 1.2% below my entry. In this case, when I started, my stop loss was 1.4% below my entry. So I'm buying and setting my stop loss so close to my entry that I'm taking minimal risk, but my RR is so extraordinarily high because my model is also just as good at finding those big breakout moves. All right, I think that's good. If there's any other questions, I might take one or two. We're using 2 EMAs as a stop loss range. I don't know what you mean by that. Could you please give some basic ideas on how to use the RR tool? I'm not sure what you mean. By that. Can you basic ideas on how to use the? I don't know what the RR tool is. Do you mean this? This is the long tool. So I always drop this on the chart when I'm entering. So if I enter right here, then I'll set my stop loss right here, and then my target may be, right here, 57.70, whatever. I could drag that around. It's all the way up here right now. Here, I could drag that down and say, all right, my target is right here at 8% above my entry. My stop loss is 1.2% below my entry, and this middle line right there is my entry. I use that tool because I can show people on my chart all three within a single tool, but the target I don't really focus on. I will set the target at my potential target like I did here. I set that wave 5 target I set the target line up here where that wave 5 ends at the 1-to-1 extension, but I don't get too hung up on it because most of the time, sometimes I have been, especially recently with shorter term trades, I have been buying and selling directly, but most of the time I'm not just selling. I usually use a trailing stop loss. I move my stop loss up progressively to lock in profit. Like I was saying, once we get up to the 236, my stop loss goes up to my entry and it becomes a risk-free trade because I got that initial boost and I can lock out the risk. And then as we get above that and get higher and higher, I can use my stop loss to lock in more and more profit. So most of the time I move my stop loss up progressively until it comes down and stops me out for a nice big profit. I don't worry about selling at the exact top. When I'm doing rapid trading and I'm doing really fast flash trading, scalping, short-term day trades, I need to buy and I have to sell quickly, so I can't just use a trailing stop. I actually need to dump when we're coming down. So that's how I do that. So B Mullen, you can replay the stream when we're done if you missed it earlier, but we talked about all that, exactly what different supports I'm looking at. You'll have to go back and rewatch it. Cool. All right. No big deal. Just rewatch the stream from the beginning. I talk about all that stuff. Are you in the group? If you're in the premium group, then just hit me up in Discord and we can look at any other charts you want to look at. Just check and see if any of the guys in the chat. I don't see any questions in the group for the stream, so. Oh, that's you. I didn't know that was you. Okay. Yeah, I talked about all that. Now I see the last name. Okay. I talked about all that in earlier in the stream. So rewatch this stream back, and then if you have any questions beyond that, I can explain in the group. But essentially, this is primary entry now. If this fails, my secondary attempt would be down at either the 618 at the top of the cloud right there, or maybe if we get support and bounce at the 0.5, that'll be right where the 99 is in a couple hours. So I might end up entering right there. If we fail at this support and I get stopped out, I might just buy right back in down around the 0.5, but I don't think that's going to happen. I expect either the EMAs to hold or the 382 to hold up here and push up to wave 5. Or if we are going to fail, there's only two other possibilities. We bounce down here at the 618 in the top of the cloud, or we completely fail and go down to 3K. Discord, well, you can get into the basic group if you want. The premium group is not completely full now, but it will be tonight. And the reason why, for those who don't know, I do several phone calls a day with premium members. I do live streams, group calls. I chat all the time with them. It takes a lot of time. I mean, I dedicate literally every ounce of life I have to this thing. Nobody's more dedicated to a group like this. Trust me. No other group out there, any group leader out there would be like, holy shit, I don't know how Jesse does it. I really put a lot of time into it. One-on-one calls all day, every day, 7 days a week with premium members. If you're a premium member and you DM me, I will get on the phone with you and we could chat, or if I have time. Even now, there's probably like 4 or 5 people in the last week who have asked me to get on a call, and I just didn't have time yet. So if you guys are listening, if any of you, shoot me a message and we can do it today because I have some time this afternoon. So, but yeah, that's why I limit the amount of people who can join the premium group. The way it's been picking up today, we've had a bunch of new signups, so I would expect by later tonight we're probably going to be at that limit. So if you wanted to get in beyond that, that's fine. Just when you go to sign up, there'll be an option to get on the wait list. And then it takes anywhere from a day sometimes, given how busy we are. And since there aren't that many people expiring in the next 2 days, it might take up to like 5, maybe 6 days before spots open up. But chances are it's usually like 1 or 2 or 3 days. But there's just not that many people expiring. So if the few people who are expiring all renew, then we're probably going to be pretty full. But all right, that's it. Thanks for stopping by, guys. Appreciate it. If you're not in the group and you want to join the group, it'd be a really great way to support me. You get my content. You get Chart Vampire. Again, he's an absolute god, especially a longer-term analysis. And the Cryptomist is really great, too. So you get all of our analyses to help you, spot trends and look for potential opportunities. And then from an educational perspective, I give everything I have to Flux University. I love teaching this stuff. If you didn't get that from this stream, I'm obsessed with teaching this stuff. That's why I sit here last night. Every night I say, I'm going to do a really quick stream before I go to bed, and I end up doing a 2-hour-long stream because I encourage people to ask me questions, and someone asked me about an indicator. I just love teaching it and sharing every single thing that I know. So if you want to learn and you really want to learn how to manage risk and find these big breakouts and stuff like that, by all means, I would love to have you in the group. I would be honored to teach you, hopefully help you become a better trader. So I'm here if you need me. Let me know. And in the group, we have a really, really great group where we send each other the coolest, best dick pics. So I think a lot of you guys will like it. All right, thanks for stopping by.